Hey everyone, welcome back. Today, we're going to take a deep dive into something really interesting.
Oh,
The world of Swedish real estate investment funds.
interesting.
These are the groups that basically pool money together to buy and manage property.
Right.
And our source for this deep dive
Hmm.
is a recent academic thesis from KTH Royal Institute of Technology.
Okay.
And they actually interviewed 13 different fund managers for
Wow.
this. So we get a lot of different perspectives. But
Yeah.
we also have a few extra expert opinions sprinkled in there.
Gotcha.
Um, but here's the thing that got me.
Okay.
Even with a potential recession,
Mm-hmm.
looming over everything,
Hmm.
all these funds are basically like, nah, we're good. Holding their ground. No drastic changes.
Interesting.
Which kind of surprised me at first.
Yeah, it's like they're saying, we've seen this movie before.
Yeah.
I mean, a lot of these funds,
Right.
they locked in their investment plans before the market,
Oh, yeah,
started getting all shaky. So they're basically just like sticking to their guns.
that's a good point. They already set their course.
Exactly.
But you'd think they'd be a little more, I don't know, jittery.
A little bit, but also,
Yeah.
Swedish real estate
Mm.
has historically been a very stable market.
Sure.
It doesn't have these like wild swings that you see in other countries.
Okay, that makes sense. So they're cautiously optimistic,
I think that's a good way to put it.
but they're not completely ignoring the risks.
Oh, definitely not. The thesis actually highlights two big ones:
Okay, lay 'em on me.
tenant risk and financing risk.
Okay, so break those down for me.
All right, so tenant risk.
Mm-hmm.
That's basically the fear that if the economy
Yeah,
tanks,
right.
tenants won't be able to pay rent.
Oh, right. Like if businesses start shutting down,
Exactly.
people are losing their jobs.
Mm-hmm.
Yeah,
Those rent checks stop coming in.
makes sense.
It's a domino effect.
And then that leads us to financing risk.
Right, because with interest rates
Yeah.
going through the roof,
Sky high.
it's getting really expensive for these funds to borrow money.
Yeah, it's like trying to buy a house when the bank suddenly doubles the interest rate.
Exactly. Not a fun situation.
Not ideal.
So yeah, these higher interest rates,
Mm.
they're adding like this extra weight to their financial burden.
It's like carrying around a backpack full of rocks.
Right. So it makes perfect sense that they're being super cautious.
Totally.
They have to be extra careful with their underwriting process.
Underwriting, that's where they scrutinize every detail of a potential investment. Right?
Exactly. Like a hawk eyeing its prey.
Okay, so what are these funds actually doing to mitigate these risks?
Good question.
Yeah.
Think of it like adjusting the sails on a ship
Okay.
to weather the storm.
Gotcha.
They're not jumping ship,
Okay.
but they are being more selective.
Smart move.
Right.
So they're like, okay, we're sticking to our plan,
Yeah.
but we're going to be a lot more careful
Exactly.
about which properties we choose.
Makes sense.
Okay, I'm following you so far.
Okay.
So they're being more selective. And what else?
Well, it's kind of like navigating a ship through a narrow channel, right?
Oh, I see what you mean.
They need to know exactly where the rocks are
Right.
and how to steer clear of them.
Avoid those hazards.
Exactly.
That's a great analogy.
Exactly.
So it's all about balancing, sticking to the plan, but also making those little adjustments.
You got it.
Okay, so the thesis also talks about some financial stuff,
Okay.
investment metrics,
Mm-hmm.
and it mentions NPV,
Yes.
net present value,
All right.
and then there's IRR.
Internal rate of return.
Right.
Classic.
Yeah, the classics.
Yeah.
Are these still the go-to tools, even with a potential recession?
They are. I mean, think of NPV as a way to measure the overall profitability
Right.
of a project.
Uh-huh.
And it takes into account the time value of money.
Right. $1 today is worth more than $1 tomorrow.
Exactly. Because you could invest that dollar today and earn interest on it. Right.
So NPV helps us see
Okay.
if the future cash flows from a project
Sure.
will actually outweigh the initial investment, but factoring in
There.
that time value of money.
So we're looking at the long game here.
Yes, exactly.
That makes sense.
And then IRR,
Mm-hmm.
that calculates the potential rate of return
Okay.
that an investment's expected to generate.
So it's kind of like a speedometer for our investments.
It is. The higher the IRR,
Yeah.
the faster your money's potentially growing.
Okay. So those are like the bread and butter
Yeah.
of real estate investment analysis.
The fundamentals.
Right. The fundamentals. But, with all this talk about a potential recession,
Mhm.
shouldn't funds also be paying really close attention
Oh, absolutely.
to metrics that actually assess risk?
Yeah,
like
things like
the debt-to-equity ratio,
Yes, very important.
or the loan-to-value ratio.
Absolutely.
Those are crucial.
They are, because those ratios really help you understand a
Yeah.
fund's financial health. Gotcha.
And its ability to withstand economic shocks.
Right.
So debt-to-equity ratio, that tells us how much a fund relies on borrowed money
All right.
versus its own equity.
So a higher ratio means more debt, which is riskier during a downturn.
It is. It's like building a house on a shaky foundation.
Right. If things get rough,
Yeah.
it could all come tumbling down.
Exactly.
And then the loan-to-value ratio.
Okay, so that one compares the amount of a loan to the
Right.
value of the property.
Yeah.
So a high LTV could be a red flag
Okay.
if property values start to decline.
Oh, it's like if you buy a car with a huge loan
Exactly.
and the car's value drops.
Yeah,
You could end up owing more than it's worth.
you got it.
Okay, so these ratios are like warning signs.
They are.
Right.
Red flags.
Whereas MPV and IRR tell us about the potential profits.
Exactly.
These ratios are like, hey, be careful. There could be some trouble ahead.
Exactly.
It's like a balancing act.
It is.
You got to look at both sides.
Absolutely.
And the thesis suggests that funds are definitely becoming more mindful
They are.
of these risk metrics.
Yes, especially in these uncertain times.
Okay, so they're like,
Mm-hmm.
okay, we got to make sure we're not overexposed,
Precise.
not putting all our eggs in one basket.
Smart move.
So they're thinking about risk,
Mm-hmm.
and the thesis also dives into this concept of capital structures,
Okay.
which sounds kind of complex.
It can be, but think of a capital structure,
Okay.
like the recipe a fund uses to finance its investments.
Right.
It's the mix of debt and equity that they
Right.
use to
Yes.
buy and manage properties.
So some funds might, like, rely more on debt,
Mm-hmm.
while others prefer to use more of their own equity.
Exactly.
It's like choosing between getting a loan for a car
Yeah,
or paying for it all in cash.
that's a great analogy.
Right. And so the choice of capital structure,
Yeah.
that depends on, like,
It depends on their investment strategy, their risk appetite,
okay.
the market conditions,
Right.
all sorts of factors.
It's like choosing the right ingredients for a meal.
Mm-hmm.
You want to make sure it's all balanced,
Absolutely.
suits your taste.
Exactly.
Okay, so we've got our capital structure.
Right.
And then the thesis gets a little theoretical here.
Oh, here we go.
It talks
Yeah.
about the Modigliani-Miller theorem.
Okay.
You heard of this?
Oh, yeah. It basically argues that, like, in a perfect market,
Okay.
a company's value is independent of its capital structure.
Wait, so it doesn't matter if a fund uses a lot of debt
Mm.
or little debt.
That's what it's saying.
That seems kind of counterintuitive.
I know, right? But remember, this theorem,
Right.
it assumes a perfect market,
Yeah.
which
doesn't exist.
doesn't really exist.
Right. It's like saying
Mm-hmm.
in a perfect world, everyone would be happy all the time.
Exactly. It's a nice thought.
Right. But it's not reality.
Not really.
So in the real world, things like taxes,
Oh, yeah.
bankruptcy costs,
Uh-huh.
the availability of information,
Right.
those all actually influence
They do.
funds' capital structure decisions.
Absolutely.
So it's not just like a one-size-fits-all
Wow.
kind of approach.
Every fund needs to find its own balance
Okay.
based on its circumstances.
That makes sense. It's about tailoring the financing to fit the investment,
Exactly.
like choosing the right shoes for a hike.
I like that.
You wouldn't wear flip-flops to climb Mount Everest.
Definitely not.
Okay, so we've got capital structures.
Mm-hmm.
We've got Modigliani-Miller, which is interesting.
Yeah.
But now let's talk about something
Okay.
that's been getting a lot of buzz lately.
All right.
ESG,
Ah, yes.
environmental, social, and governance.
The big three.
Right, ESG.
Mm-hmm.
I've heard about it, but I'm still not quite sure
Yeah.
what it means in the context of real estate investing.
Well, it's basically a framework
Right.
for assessing a company's impact on the world.
Oh, okay.
It's about looking beyond just the financial returns and considering the environmental, social, and governance
Yeah.
implications of an investment.
So it's not just about making money.
It's not just about the bottom line.
It's about making money responsibly.
Exactly. It's about being a good corporate citizen.
I like that.
Yeah.
So investors are realizing that ESG factors
Yes.
can actually have a big impact
They can.
on a company's long-term value
Absolute.
and its resilience.
Yes, very much so.
Which makes sense,
Mm-hmm.
because if a company's like polluting the environment
Right.
or mistreating its workers,
Mm-hmm.
it's likely to face legal issues, reputational damage,
Definitely.
maybe even financial penalties.
Exactly. So ESG is becoming increasingly important.
And the thesis highlights this.
It does, driven both by investor demand
Okay.
and financing requirements.
So it's like a win-win.
It is.
Investors feel good about their investments, and the world benefits from more sustainable practices. It's like having your cake and eating it too.
Well, almost.
Almost, right?
Because ESG investing can be complex.
Oh, okay.
You really need to do your due diligence
Right.
to make sure the companies are walking the walk.
So there's still room for
Correct.
critical thinking and skepticism,
Absolutely.
even in sustainable investing.
You got it.
We need to make sure those ESG claims are actually genuine.
Exactly.
Okay, so ESG is becoming a big deal.
It is.
And the thesis also mentions that some real estate funds are actually using ESG as like a competitive advantage.
They are.
How so?
Well, they're investing in energy-efficient buildings,
Right.
implementing green building standards,
Gotcha.
even creating social impact through their projects.
That's awesome.
They're going above and beyond
Right.
the minimum requirements.
So they're not just mitigating risk, they're actually creating value.
Exactly. Turning a potential liability
Yeah.
into a valuable asset.
And this probably attracts investors who want to align their investments
Oh, absolutely.
with their values.
Yes. They want their money to reflect their commitment to a sustainable future.
It's like when you buy fair trade coffee or sustainably sourced clothing.
Exactly.
It's about supporting businesses that do things the right way.
Consumers and investors are voting with their wallets,
Yeah.
and companies are starting to take notice.
They're realizing that sustainability is not just a trend.
Right.
It's a shift
It's here to stay.
in how we do business.
I got it.
So ESG is like transforming the real estate investment landscape.
It is making it more sustainable, more responsible, and
Yes.
ultimately more profitable.
It's a win-win for everyone involved.
That's the goal.
Okay, so we've covered a lot of ground here.
We have.
Let's connect back to the listener for a second.
Okay.
The world of real estate investing,
Yeah.
it's a lot more than just buying and selling properties.
It is.
It's about financial metrics, risk assessment,
Yes.
and even the ethical implications of like where we put our money.
That's right.
It's a big responsibility.
It is.
And even with a potential economic downturn,
Yeah,
there are still opportunities out there
definitely.
for investors who are, well,
We're well-informed, adaptable,
Right.
and maybe most importantly, patient.
patience is definitely key, especially in real estate.
Absolutely.
So before we move on, I want to leave our listeners with something to think about.
Okay.
How might the rise of alternative asset classes, like data centers
Oh, interesting.
or renewable energy infrastructure, shape the future of real estate investment in Sweden?
That's a great question.
It's all about evolving needs,
Yeah.
technological advancements, and the quest for both financial and environmental sustainability.
Absolutely.
It's an exciting time to be in the real estate investment world, that's for sure.
It is. There's a lot going on.
So stay tuned for the next part of our deep dive, where we'll kind of tie everything together
All right.
and explore some more intriguing insights from this thesis
Sounds good.
in our conversation today.
I'm looking forward to it.
Awesome.
Yeah. Yeah, it's like you got to know where you're going. You can't just sail blindly.
Exactly. You need a map and a plan.
Right. You need to anticipate those tricky turns.
Speaking of tricky turns, the thesis also mentions something called ESG.
Oh, yeah. ESG. That's a big one these days.
ESG, environmental, social, and governance.
It's like the triple bottom line.
Right, so it's not just about profits anymore.
Nope. It's about people and the planet, too.
So how does that play out in the world of Swedish real estate funds?
Well, investors are getting more and more interested in sustainable investing.
They want to make sure their money is doing good in the world.
Exactly. And Swedish real estate funds are responding to that demand.
So they're incorporating ESG factors into their investment decisions.
Absolutely. They're looking at things like energy efficiency, waste reduction, and social impact.
It's like they're trying to build a better future one property at a time
Yeah, it's not just about building buildings, it's about building communities.
and making a positive impact on the environment.
Exactly. Sustainability is key.
This is all really fascinating stuff.
It is. There's so much to consider in the world of real estate investing.
It's way more complex than I ever imagined.
It's not just about buying low and selling high. There's a whole ecosystem to understand.
And it's constantly evolving too.
That's the exciting part. There's always something new to learn.
Well, I'm definitely learning a lot from you today.
Glad to hear it.
So what else did we uncover in this thesis?
Well, one thing that stood out to me was the discussion of risk management,
Oh yeah, risk is a huge factor in any investment.
especially in real estate with all the variables involved.
So how are these Swedish funds approaching risk management?
Well, they're definitely taking a more cautious approach these days.
Given the economic uncertainty, it makes sense to be prudent.
Exactly. They're doing their due diligence, carefully analyzing potential investments, and diversifying their portfolios.
It's like they're building a fortress to protect their investments from the storms ahead.
Yeah, they're trying to weather the storm and come out stronger on the other side.
It's all about resilience and adaptability.
Those are the keys to success in any market.
Well said.
Thanks.
So as we wrap up this part of our deep dive, I want to leave our listeners with a few key takeaways.
Okay, sounds good.
First, ESG is here to stay. It's not just a trend. It's a fundamental shift in how investors think.
Absolutely. Investors are demanding more from their investments. They want to see a positive impact on the world.
And Swedish real estate funds are stepping up to the plate.
They're incorporating ESG factors into their strategies and attracting investors who share those values.
It's a win-win for everyone involved.
Exactly.
Second, risk management is more crucial than ever in today's uncertain market.
Yeah, you got to be proactive and strategic in how you approach risk.
Swedish funds are doing their homework, carefully analyzing investments, diversifying portfolios, and building resilience into their strategies.
They're not just hoping for the best, they're planning for the worst.
And that's the key to long-term success in real estate investing.
Absolutely. You got to have a solid foundation to withstand the ups and downs of the market.
Well said. So stay tuned for the final part of our deep dive, where we'll explore some specific examples of how Swedish real estate funds are putting these principles into practice.
I'm looking forward to it.
Me too. It's going to be fascinating to see how they're navigating this complex and ever-changing landscape.
Agreed. It's an exciting time to be in the real estate world.
Welcome back, everyone. We're in the home stretch now of our deep dive into these Swedish real estate investment funds.
Yeah, we've covered a lot.
We've talked about all kinds of risks, their financial strategies, and ESG.
The big one.
Right. So now it's time to kind of put it all together.
Okay.
See what really stands out from all this research.
Yeah, let's connect the dots.
You know, what I find really fascinating is how these funds are, like, adapting in this crazy landscape.
It's a wild world out there.
Right. They're not just reacting.
Yeah.
They're actually seeking out new opportunities.
I agree.
And refining their approach.
Like they're playing chess.
Yes. Thinking several moves ahead.
Exactly.
And one area where this adaptability is really clear is in their evolving perspective on office space. The elephant in the room.
Right.
With so many people working remotely these days.
It's a whole new ballgame.
Are offices becoming obsolete? What's the future?
Well, it's not so simple.
Right.
I mean, some funds are definitely cautious about investing in those traditional office spaces.
Makes sense.
But others actually see potential.
Really?
Yeah, they're thinking about how to adapt to the changing needs of tenants.
So it's not about abandoning offices completely.
No.
It's about, like, reimagining them.
Yeah, for a new era of work.
A new era of work. I like that.
Think of it this way. Instead of those, like, huge cubicle-filled offices, we're seeing a shift towards more flexible, collaborative spaces that cater to, like, a hybrid workforce.
So it's about creating spaces that people actually want to come to.
Exactly.
Yeah.
Like enticing them back.
Yeah, with cool amenities, a sense of community. Providing that human connection that you don't always get when you're working remotely.
Exactly. It's about creating a destination.
Right.
Not just a place to work.
Not just a place to park your laptop.
Yeah. And this shift requires a deep understanding of how the workplace is evolving.
You got to be like an anthropologist.
Yes. Studying how people work, interact, and thrive in these new environments.
It's fascinating how real estate investing is becoming intertwined with fields like workplace psychology and design.
Absolutely.
It's not just about bricks and mortar anymore.
Yeah, it's so much more.
Okay, so we've got offices evolving, and the thesis also talks about new investment opportunities beyond just those traditional property types.
The new kids on the block.
Right. So funds are exploring alternative asset classes.
That's right, like data centers.
Oh, data centers.
Yeah.
Those massive buildings filled with servers that power, like, the internet.
The backbone of our digital world.
Right. It's like investing in the internet itself.
Exactly. And as we rely more and more on technology, the demand for those data centers just keeps growing.
They're becoming essential infrastructure.
Absolutely. Like roads and bridges for the digital age.
And then there's renewable energy infrastructure.
Yes.
This is investing in the future, like the sustainable future.
Solar farms, wind turbines, hydroelectric plants.
It's powering our world with clean energy.
Exactly. And not only is it good for the planet,
right,
but it's also potentially very profitable.
It's a win-win.
Yeah, you're making a positive impact and potentially earning some nice returns.
You're hitting two birds with one stone.
Okay, so we've got data centers, renewable energy, and one final point.
Okay, hit me.
The thesis really emphasizes the importance of active portfolio management.
So it's not just about buying a property and then sitting back and collecting rent checks.
Not at all. It's about being hands-on.
So successful real estate funds are always monitoring their investments, adapting to market changes, optimizing their portfolio.
Constantly tweaking and adjusting.
It's like tending a garden.
I love that analogy.
You're constantly pruning, weeding, nurturing those investments.
Yeah, you got to make sure they flourish.
And this is especially important in a dynamic market like we have today.
Absolutely. Things can change quickly.
So to sum up our deep dive, what are the key takeaways here?
Well, I think the most important takeaway is that real estate investing, it's not static.
Right.
It's constantly evolving.
You have to really understand the market trends,
the
financial stuff, risk assessment, and even like the ethical implications.
Absolutely. Where we put our money matters.
It's not just about the numbers.
Right.
It's about the bigger picture.
Yeah, and for those who are ready to embrace all this change, real estate investing can be both rewarding and impactful.
I agree.
You can make money and make a difference.
Well said. So that wraps up our deep dive into Swedish real estate investment funds.
Phew, we made it.
We did. We learned how these funds are adapting, innovating, and shaping a more sustainable and resilient future.
Definitely.
So keep exploring.
Yeah.
Stay curious.
Stay informed.
And maybe you'll uncover some fascinating insights.
Who knows what you'll find
On your own deep dives.
Until next time.
Happy investing.